Welcome to the March 29th, 2026 special report on Operation Epic Fury and the market impacts. I'm joined by Alex Tolene, President, McGowanGroup Wealth Management. I'm Spencer McGowan. We're grateful you tuned in, and this brings to life the charts and graphs that we do with our weekly audio podcast. Alex, explain this first chart to us.
This is the wholesale gas prices. Wholesale gas prices up significantly, 78% for the year, really taking off at the start of this war, Spencer. So what we've seen here...
Yeah, there's the start of Operation Epic Fury.
Yeah,
Every station just raised their prices instantly.
They did.
You go from 3 to 4. That was the rule.
There's actually a report out by the Total CEO said we've never seen refining margins like we see right now.
They are banking cash.
Oof, that's crazy.
ExxonMobil has huge refining capacity. Marathon Petroleum, Valero.
Yeah,
they're just banking cash.
They've all been making big runs right now. Makes me wonder, if you have a huge gain, do you trim a little bit?
Well, there's a place for that. But our energy weighting, I will say this on the portfolios, most of the reviews, if you look overall at the managed accounts, it's a +5 versus a -5.
Yeah.
So the reviews don't take long then. They're like, well, I said, our main job right now is just don't mess it up yet.
Yeah.
Don't mess it up.
They call that 1,000 basis points of outperformance.
Oh, well, hey, to be fair, we underperformed in the fourth quarter, right?
We did.
And I'm going to show one of the reasons that, we had a respectable year. It was above our benchmark, but the S&P and the NASDAQ set a really high benchmark.
They sure did.
And the whole tech sector has reversed. Now, I don't have a chart on this.
Okay.
But the NASDAQ now down 6% for the year. But you look at the top tech companies, it is a minefield, and it got worse at the end of the week.
Some of those big names, Microsoft down almost 30% for the year. It's been a pretty big move. Well, there's lots of disruption. So everything we knew in the fourth quarter has at least temporarily been rendered not true. Yeah, I want to cover this chart real quick.
Okay,
I like this.
Okay, well, explain what it is.
Yeah, this is interesting. So this is the price of crude oil. This is West Texas Intermediate crude. At the end of day Thursday, about $93 a barrel. What was interesting is 6 months and a year ago, you had reports coming out that, crude's going to $50 or $45 a barrel because there's just too much oil out there.
And everybody knew it.
Yeah.
It was oversupply.
But everybody knew it. All the companies were going to do poorly, and that has not been the case.
Well, let's go to the next item. Okay. There's the Dow. It's actually a -4.
Yep.
Stephen made the chart, and then it went down 1%.
Yes.
Shout out to Stephen Norris, Super Chuck Norris, 11 years with McGowanGroup Wealth Management.
Yeah, long time.
A head of trading and the most accurate human being I have ever worked with.
Yeah, I'm really glad.
He catches my mistakes before I type them.
Well, I'm really glad he got here because that means I don't have to do it. He's better at it than I am.
Delegation is the key.
Find people that are better at it than you and then give them the reins. That's how we do it.
All right, I have an observation.
Okay.
So this is the S&P Oil and Gas Index.
Mm-hmm.
Up 36% for the year, right?
Big year.
So total reversal between tech and energy. But this also explains our energy weighting. I wish we had more of it. We should have all been, it's like coulda, woulda, shoulda.
Yeah. I do remember in one of the shows 6 or 7 months ago, I was like, man, I just don't feel like I own enough energy. And I'm glad I added some then. I'm glad the portfolios have a great weighting. Obviously you don't want to get so concentrated in one space that if it doesn't work exactly the way you want or takes longer, you're not, pulling around the wagon.
I did that in 2018.
Yeah, we've done that before.
But we've prevailed each time.
It's worked out, hasn't it?
There'll be other bargains. And what this is telling us is something that comes up when we see the other chart. Now there's two charts. There's one, this is year to date, right?
Yep.
And this is like gold was last year. Coulda, woulda, shoulda. We'll get to gold here in a second.
Well, yeah, you don't want it anymore.
But in this case, that was a surprise. Somebody knew something. All right. Now, I just have to say, if I am ExxonMobil or Chevron, do I want people? Do I want to know people in the CIA and the Defense Department?
Probably, yeah.
Well, I was wondering, because I'm looking at the earnings, the earnings reports and the forecasts, and it was long about the end of February. I'm like, these companies, yes, we love them because they cash flow and we have them in the portfolio, but they don't deserve this, right? They had moved up like 20%.
Oh yeah.
I'm thinking,
some more than that.
Some people knew something. This is not conspiracy theory podcast, but it was interesting that the market seemed to anticipate, Epic Fury. Epic Fury began February 28th, right?
Yeah.
4 weeks into it, and the monthly performances are interesting. In some respects, that's private credit, but in some respects, it feels like we are, we're having a little bear in the technology sector.
Oh, yeah.
I feel it's at least a correction, and things seem to soften this week. I would liken this to the tariff meltdown last year.
Okay.
I read Ken Fisher's article, a friendly competitor based here in Texas as well, and he put it in perspective what things look like 6 months or 3 months after these types of conflicts disrupt everything. And
yeah, he had a 3-step process, right? The first is, hey, we have higher prices, volatility spikes up, you need to sell. That's kind of the anticipation, the saber rattling, then the bobs start dropping, and then everybody really kind of starts to panic. And then third part is stocks start rallying even before the end of the conflict because they start anticipating, hey, we're going to get back to trend growth as soon as this thing is over, right?
okay,
We just don't know when that day is. It could be next week or it could be 2 months from now.
well, there are some bargains setting up. I will say that our theme in the portfolios is deep value,
That's right.
right? And where was our... There you go. Oh, this is shout out to Round Rock, Texas-based Dell Technologies.
Yep, I remember when this thing was trading.
Who's writing checks? Who's getting checks? That's the AI question. Apparently, Dell's getting some checks.
In the tech space last year, Dell was the cheapest value spot to be in tech. And then it just stayed there for a long time. And then all of a sudden,
Well, and look what was
46,
happening right
47%.
here. Remember, not a recommendation for your portfolio until you go to networthradio.com, set up your time to update your plan. Better yet, come to the Crescent. We love to serve affluent families and would love to update your plan. Now, so this component, wrong about here, I was kind of sad.
I was
right?
super sad.
Because, Micron and Western Digital, everybody said, oh, we're going to need memory. Well, Dell has to buy the memory, stick it in the box,
That's right.
and then deliver it. Well, apparently they gained some serious pricing power because they already had their chip supplies.
Yeah.
And wow, but deep value, at 10 to 12 times earnings
Yeah, Dell did fit that deep
with
value.
good growth.
Well, what was funny about that, it took longer than I anticipated.
Took longer,
Yeah.
and sometimes that's it. Now, this was a choice for the portfolios when you said nuclear.
Yes, 2 or 3 years ago.
Yep, everybody got excited about Oklo, ran the valuation to $30 billion, even though they had zero sales.
That's a bad idea.
Zero sales, losing money. BWXT, they make money because they make the small modular reactors for ships and subs.
That's right.
They know how to do it. They got the regulatory process down, and that is a triple actually.
Since we added it to the portfolio, it's on the verge of a breakout now. Obviously, with this market, with the volatility in the marketplace, it's struggling to get out. But I do want to point something out here, and that is when you have a weak tape, when the S&P and the NASDAQ
weak tape.
Yep.
That means sellers?
Yep. There's lots of sellers. They call it a weak tape.
That's sellers. I'll put it in easy language.
That's back to my trading days. But you have a name that's holding up really, really well. It's not making new highs necessarily, but it's holding up. When these things start to dissipate, those names tend to become your next leaders of the next cycle.
Because they held their own.
Because they
like
held their
Super
own.
Mario, they didn't go like this. They held
That's right.
their own.
That's right. So it's always good to keep an eye on, hey, what has been keeping up? What still fits my categories? And when this thing starts to turn, you will see most likely these types of names move first.
Now, let me find it. Okay, this is who we've been picking on.
Yeah.
Okay, Nick Nemeth is a post in X. You can find it. He's a great analyst. He claims he's not.
But he is.
He's a great analyst.
He's just being humble.
What he was saying about this company's fund, this is the common shares, and the earnings still look just fine.
Well, yeah.
But he's also saying their Sharpe ratio, the measure of return versus risk, is better than Madoff's was, and Madoff was making it up. Now that's a bold claim. I'm not making the claim either way. But I am saying this is one of the reasons that we were forced for risk control to reduce our high yield holdings.
Yep.
Right? And we've been reducing them for some time. We loaded up at the end of 22 and 23, have taken some profits and reduced the weighting. That 14 trillion in private equity and private credit being, he claims 4 trillion of it, you're seeing some real pressure to value those things mark to market.
That's right. And the way that the marks work is they say the fund itself is saying, hey, we think these are valued at X. Right? So they're marking their own book. And so they don't have to remark it really until something trades.
It has nothing to do with what anybody would pay for.
That's right. That's right.
There have been some cases, I think it was Blackstone, that all of a sudden it was at par in the portfolio 90 days ago, and then they changed it to zero, which is a little disturbing.
That's not good.
So that's this year's crisis. Now, we're in the midst of it, and if you can keep your head about you, we'll bring you more from the deep value every week. Thank you for tuning in. McGowanGroup Wealth Management stands ready to help you and your family when you need it most. Let's start with a plan, because it's better to start with a plan than end in a panic. Go to networthradio.com and we will respond promptly. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.